But it's time now for our triple play. Three stocks that Brad, Rachelle, and I are watching this afternoon. And I'm kicking things off with Lululemon. Now, the athleisure company is now launching into footwear with its first line of sneakers. The first product is set to be a running shoe called Blissfeel, going for about $148 starting later this month in North America. They're also going to be sold in China and the United Kingdom starting on March 22nd. Now, Lululemon also plans to add a trainer, a gym shoe, and a slide shoe later this year to its line. And right now, these are geared towards women, but men's footwear is also set for a 2023 start date, according to the company as well. But guys, clearly this move puts Lululemon in direct competition with the likes of Nike and Adidas, some of the other major incumbent footwear makers. I haven't seen these shoes in person personally, but we do know that Lululemon has a strong reputation, a strong brand following, and a reputation rather mostly in research and development and really developing high quality, if a slightly expensive price point athletic wear on the apparel side. So I think it is going to be interesting to see what the reception is going to be for these shoes.
It is, and especially, yeah, go ahead, Rachelle.
Well, I was just saying, she mentioned brand loyalty. There's something Lululemon clearly has on its side, despite the fact that you have this lion's share of the sports footwear market going to Nike. But it's interesting because CEO Calvin McDonald hinted at selling the company's own footwear back in 2019, and that was even before the pandemic. So he called it a natural step for the company. We'll have to see if they're able to keep up with the likes, as you said, with some of the big dogs, the Nikes and the Adidas.
And they've been teasing this for years. As you mentioned, Rachelle, they were talking about this even in the pre-pandemic times. And with that in mind, since then, we've had even more of this inclination from Adidas to sell off Reebok, and some of the opportunity in the footwear category has seemingly dissipated with more entrants into the market and even going public. I'm thinking about you, Allbirds, and entering into even more of that performance type of space. Now, taking Allbirds stock performance out of the conversation here, I think for Lululemon, what they are clearly earmarking is the same type of strategy and entry into footwear as they've done with the athleisure and apparel wear that they have done so well in. You start in the women's category, see if you can expand into men's, see what type of traction there is, and we'll see how footwear ultimately does for them. And at a time where you're already seeing more of that direct-to-consumer strategy, which was prompted by Lululemon, we'll see if that works for them in footwear as well.
Now, shifting gears, literally, my pick for the day is actually Caterpillar. Now, the stock shot up towards a 4-week high in early trading and kept climbing to around 8%. We see now that it has eased back a little bit. It's now sitting at about 7.3%. Now, this jump actually came after investment bank Jefferies equity analyst Stephen Volkman said the company has historically been a strong hedge to commodity and general inflation, obviously something that's very welcome with the US seeing inflation at 40-year highs. The stock is up today and also year to date, and that's also been helped by President Biden's infrastructure law, signaling that more construction equipment purchases are coming up ahead to meet that demand.
Yeah, and I think one of the things with Caterpillar as well is this really has been a bellwether of global investment and capital expenditures, and that is something during the recovery that we've really seen pick up here. I mean, just taking a look at some of the macroeconomic indicators, we had the Institute of Supply Management's manufacturing index for February coming in better than expected. That's something that's really going to be lifting all ships here, including Caterpillar. If we take a look at that stock, up about 2.5% for the year to date, which doesn't sound like a lot, but when you have the broader market and the S&P 500 down about 11.6%. Definitely an outperformer here when we think about the broader stock indices.
Yes, certainly. And for Cat, it is. And it continues to come back down to any of the building that they can have, an infrastructure building that is set to take place in this near future as well. Just very quickly, I got to talk about Dick's. Ticker symbol DKS here because they beat on earnings and revenue in their most recent report. And one of the things that sticks out to me is, of course, this most recent record year that they also accounted for, where they saw 26.5% growth in same-store sales, record-setting full-year net sales of $12.29 billion, particularly of note there as well. But I think one thing that I would be watching with this company going forward, we've already seen how some of the major names like a Nike in manufacturing the athleisure, and not just athleisure, the active footwear and apparel, how they are also looking across some of their retail partners and deciding where they pull more of that towards their Nike Direct strategy. And that is a significant area where I think Dick's is going to have to be paying close attention to, especially as we had heard with Foot Locker just last week as well, and the relationship between Nike and Foot Locker, how that may also impact Dick's in the future too.